The broadcast is now starting. All attendees are in listen-only mode.
Good evening, everybody. I take it you guys can see my screen. I did switch to the Sentiment Stages tab from the primary tab. Same count, just I know people like to see the blue line with those stages of sentiment. I tried to overlay and stretch that out along with our current market path for since the top of primary wave 3 in the big ABC correction for primary wave 4, and then the upswing that we're currently working on. And I think we're somewhere kind of right here in the middle. We just had our nice fourth wave consolidation, possibly still able to get one more low, and we'll zoom in there and take a look at it. Although with the continued move higher the last 2 days, achieving one more low is significantly less likely, but we'll look and see where that might be able to manifest. And then what the shape of the rest of this move as the fifth wave of 3 should look like. I think the great thing about this consolidation now that we've talked about a lot for the last couple of times that we've been together is that now that we got this fourth wave, or most of the fourth wave, if it does in fact want to try for one more low, mine and Garrett's counts and Avi's and Mike's are all much more in alignment. There are still some nuances where Avi and Mike G are counting a larger wave 1 and wave 2, so their fibs are a little bit different for the target for intermediate degree wave 3. But I don't think it's too far off. We're all looking to this 5,600, 5,700 to 6,000 region for the next significant top, and then another 4 and 5 after that. So because we exceeded the 100% extension in these fibs right here are the Fibonacci extensions for the parentheses wave 3, and that's projected off of, for me, that's off of the second low at the end of June, which is actually a higher low. So since we got a little bit past the 100% and actually including our B wave high, our higher B wave at the very beginning of January, got very close to the 123.6% extension. So Fibonacci pinball says when you're third, or if you have an expanded flat when the B wave makes that higher high close to that 123.6% extension, that you can get a more extended fifth wave, usually taking the fifth of the third up to that 1618 or maybe even higher. So that gives us a nice high probability target of the 5624 region for 5 waves up inside that fifth wave on the S&P. Now we'll take a look at the smaller degree and the structure, but before we do that, I do want to point out the similarity of, we have an expanded flat here for the larger primary degree wave 4. And we already know that this move inside of primary wave 5 is already pretty extended, but this just gives you an idea of that underlying bullishness that is indicated by having a B wave inside the fourth that stretches to a higher high, particularly if it gets almost all the way to the next fib. That shows that this next move is going to be very, very strong and could even get more than the usual extension. So now what I'm going to do is I'm going to zoom into an hourly chart, and we can take a look in a little bit more detail of, actually, let's go to a 2 hour first. I think the 2 hour, we can squeeze in all of this ideal 1, 2, 3, 4, 5 wave move up towards that 5624. That is kind of the ideal minimum pattern that we want to see. The issue with this, we have what looks like a clear ABC move up to start. So let's actually zoom in a little bit more now on the S&P. So this initial move, particularly in the ES, off of what at the time counted best as just the third of 1, 2, 3, 4, 5 waves down inside the third, and we wanted a fourth wave bounce and then one more low. We got a clear, strong ABC move up, but it was so sharp, that first move, that I think all of us were saying that looks more like just an A wave and we should hold a B wave and then get a little bit higher as that possible wave 4. And so we did that, and we got this nice ending diagonal, which was very, very clean as an ending diagonal on the micro count inside the ES futures. And we can take a look at that pretty soon, but we are counting that in real time heading up into the Fed last Wednesday, and we are looking at that being the completion of an ABC move up for a possible fourth wave, setting up for an attempts at one more low into the Fed. And then the Fed, we got that strong reversal, which certainly could have been an initial start to maybe an ending diagonal for that fifth wave down. Got a strong bounce that was also a clearly corrective bounce, but then got 5 waves down here that could not gain any momentum and looked more like another ABC correction. So that made the chances of a larger ABC bounce off of this low a lot more likely. That could have still been a possible fourth wave. And you'll see I have that faded out here in a very dark purple. If that was going to be another fourth wave, it really should have held about there. This extension higher, in my view, made that very unlikely, although not completely invalidated, because we can certainly count this move down as an ABC move for wave 1. We can count this as an A, B, or maybe an A, B, C wave down for the third, a big ABC bounce for a fourth, and that does allow for an attempt still at an A, B, C move down, at least to try for a nominal new low. I happen to think that more stocks are indicating that they are done with this fourth wave and trying to start wave 1 of our fifth wave up. So what we do need to watch for, though, is that this still looks like an ABC move up, or at least started with a corrective ABC move here. And this looks like 5 waves up. So if this is ABC up for wave 1 of a leading diagonal, we should get a pretty deep retrace, but hold a higher low, maybe around the 4360 or maybe closer to the 4300 region because this is so high, and then get another ABC move up as the third, a deeper fourth wave, again to a higher low, and then an ABC move up for the fifth, and that would give us a nice leading diagonal for the start of wave 1. The only issue that I have with this at this point is that we've started to get a little bit big for just wave 1 of a leading diagonal. Usually, I'm going to zoom back out here to the daily chart. Usually, you do not want your wave 1 of a fifth wave to be 5 waves up to a new nominal high. And based on the normal fibs that we would expect with a wave 1 this size, if we only hold a 618 retrace and don't get much deeper, and get, the third is going to target somewhere between 47.37 to 48.32, and that's already getting very close to a new high. And then if we hold a fourth and get a fifth wave up, then it is very likely that that fifth wave of the leading diagonal is going to make a new all-time high in the market. So the concern is when you have 5 waves up to a new all-time high, even though we have this expanded flat, there is a risk that that is all of a smaller fifth wave, and we get another fourth wave from there, and then get a fifth wave up. And maybe that's just the extension of this 3, or maybe that's all of a muted version of this 3. And then we only have one more high to go. So either way, finishing an ending diagonal or finishing a diagonal up into the 4800 to 4900 region is going to call for a pretty deep retrace. We know that the corrective retraces, even the bullish ones after a leading diagonal, are usually pretty deep. So most traders are going to want to fade this high and look to raise a little bit of cash and pick that back up. If this high holds more like this, if we get maybe a deeper wave 2 closer to the 4300s, and then only get a 100% extension for the third, and then only get about to the around the 4800 region, not quite a nominal new high for the fifth wave of that wave one, then it's a much higher probability that this still is only wave one. It's much more reliable, and we can look for that corrective retrace and then be insanely bullish from an ABC correction into that box. All right, there's a couple of questions. What are the first strong indications that you might have a WXY move instead of an ABC, according to Ask Fred? So that may be what we're left with here. We don't have the best wave count to squeeze in 5 waves down for a C wave, but we do have a very proportionate looking move. I mean, it's more than 200% extension, not quite a 2618 extension. So it certainly has satisfied all of a relative consolidation compared to the A wave, whether you're counting this as the A wave or whether you're counting this as the A wave. But we have a proportionate move into contextual support for all of that fourth wave, but we don't have a clear 5 waves down in the C wave. So that's one space where if this does hold a corrective consolidation and then goes on to make higher highs, then the official wave count will change from an A, B, C here with the fourth and the fifth kind of forced in place and squeezed in to just calling this maybe an A, B, C of a Y wave. So this is a WXY, very similar to the way that most of us are counting this. You can squeeze in 5 waves down as a C wave from the February 2020 high, but I think most things look a little bit more like that's an ABC move down, and so it counts better as a WXY on some charts. I kind of interchange it. After the fact, it doesn't really matter, but official Elliott Wave should be probably a WXY there too. Trader says, is there a new high from a leading diagonal? Is there still a structure? So if there is, if say we do make a nominal new high, it can still be wave one of this same fifth of 3. It just increases the risk a little bit that might be all of a small ending diagonal as maybe an extension of this, or as a slightly more muted version of this 3. We'd still be looking to hold support as another consolidation and then head to new highs from there towards the 5,500 or 6,000 region at least. But it would be a little bit more of a concern. So, I mean, I think you're probably gonna, the practical way of trading the market for most traders is probably going to be to reduce exposure and or hedge once we get to the top of this wave one, whether it's making a new nominal high or not, and then add back more significantly on that first ABC move down into ideal fib support for that wave two. And then if it clearly only gets a corrective bounce from there, then maybe you start to batten down the hatches again, because then you have the risk of a possible another C wave down from just a clear corrective bounce. But from right here, this would be a very, very bullish setup, even if this did make a higher high over January. So there was a quick question from Vinay about how do you generate those pirate ninjas. So before we go on too far, I'm going to switch from this. The ES. Oh, actually, hold on. Let's take a quick look at ES. Let's go to our nano count here. And then on the nano count, we can see in a little bit more detail that structure that I was talking about heading up into the Fed. They were looking at this as an ending diagonal for that A, B, and a C wave up. That turned out to be just the larger A, and then we had the B wave consolidation, and then a move up as the C wave that is ideally complete. And so the same support, the ideal support zone as an ABC move down for our wave two would take us to that 4350 region. So now moving over to the Nasdaq to answer Vinay's question about the pirate ninjas. I put these little arrows on my charts a lot, as I will draw a, here's my big macro clean tab. Here we go. Oftentimes I'll draw a little arrow. So just to give an example, earlier today, in a thread, somebody asked me for kind of a micro chart. So we have the same possible ABC up completing, which is much, much higher than is anything reliable for a fourth wave. But we'll zoom out and take a look at the Nasdaq in a minute and see that despite it being much higher than is reliable for a fourth, it could still count as a wave four. More so in the Nasdaq than in the S&P, and I posted that earlier this morning, that if I had to choose one to get one more low, then I would probably lean more to the Nasdaq, even though I think both of them are probably going to hold. A Pirate Ninja is just my silly way of talking about a measured move. So that's when I don't have enough subwaves or clear enough structure to put a 1-2 label or an AB label, or maybe something's a little bit too small for labels and we haven't really broken any support yet. But we had an initial move down off of a probable topping pattern and then a clear corrective bounce that looked like an ABC move up. So that sets up for a possible Pirate Ninja or a measured move. And that's what we got, helped at the close by the drop in Facebook. Got a measured move down in the Nasdaq to 100% of this move down. Looks like this could still be trying to bounce in a fourth wave, a small nano fourth, and get a fifth wave a little bit lower, but not. It looks more like this is in line with just an initial ABC move off the high, which could continue to turn into more, but not yet clearly any kind of impulsive turn down. Okay. Georgie, hold on. There's questions are coming on a little bit faster, guys. Give me 1 second to catch up. All right. Has there been any discussion? Thank you, James. Has there been any discussion around a possible black swan if Russia invades after the Olympics are over, and how that would affect the wave targets? I think the bigger risk for a black swan event was here when I was looking at this as a possible 1-2 start to a C wave down, and we did get significant downside. It just didn't gap down and get really, really nasty. On any, I guess a couple of those days were pretty severe, but there was no real like black swan event that hit the market. What I could see developing more so in the Nasdaq, if the Nasdaq is going to be identical to the S&P, this would have to be the 3 of 3. This would be trying to bottom in all of the 4 of 3, and this could still be in the Nasdaq a little bit more so than the S&P. Could still be 1, 2, 3, a very high 4 of an ending diagonal, which this really looks more like 5 waves down in the 1 and 5 waves down in the 3. So I don't think that this would be a diagonal, but you can have a 5, 3, 5, 3, 5 ending diagonal. It's not unheard of. It's just more rare. But you do have overlap with wave 1 here. So if it is a diagonal, we more often looking for an ABC move, but these count better as 5 waves down. Just as easily as we mentioned on the S&P, this could be a WX and then ABC for a Y wave complete. And then working on the start of a leading diagonal or even maybe an ending diagonal for the larger fifth wave, if that's starting here. We did get below the, oops, where'd that go? We did get below the 23.6% retrace, and so kind of got enough to minimally count all of the fourth wave, even though this is supposed to be a fourth of a larger degree on NASDAQ. I'm open to it proving it, and we'll continue to follow subwave patterns as though this is, as I posted earlier this morning, for the most part, the NASDAQ follows the micro subwave pattern in a very similar way to the S&P. But there are it has different magnitude and amplitude, and there are some nuanced differences in the count, which continue to, like with a golf ball, a tiny little, mess up with the face of your club here has a much bigger effect further down the fairway. So My primary count on the Nasdaq is that this was an A wave up inside a bigger B wave bounce. And instead of filling out a leading diagonal for wave one, that we're going to get more of a corrective ABC move up for this bigger B wave, which could make a higher high. And we could get a C wave down that doesn't actually make a lower low. But I would be looking for maybe some sort of like May 2010 type flash crash potential on maybe some of the larger tech names that they get another drop like Facebook, but maybe it comes from Apple or something that does not look nearly as bullish, that drags down a disproportionate drop in the Nasdaq compared to the wave 2 retrace that we might be looking for in the S&P. But if this holds a clear corrective retrace after getting, even if it only gets an ABC up, that can easily be wave 1 of an ending diagonal for the parentheses wave 5. An ideal support for this B wave really should hold about 14,250, 14,300 region. All right, a couple more questions. Georgie says, could you briefly explain the top dots on the PSAR? Yeah, so on my ES chart, and it's pretty much because it kind of makes a mess of the chart. It just makes it really hard to see a lot of the details of the wave count. I pretty much only do it on the ES, and I keep it on a separate tab. And I really don't put a lot of detail on this because the detail is going to get clouded by, pun intended, by the clouds and these dots. But the PSAR stands for parabolic support and resistance. I don't know exactly the math of how it's calculated. It does it automatically. It's just a regular technical indicator that's used well beyond our website. It's not anything unique to me or to EWT. It's just an indicator that functions at the different time frame that you have your chart on. And once price goes through the dot, then it shifts to the opposite dot. So if you have top dots over here, which act as resistance, and you get a price bar that goes through that level of resistance, then all of a sudden momentum shifts and you have bottom dots. So now we're going to be working on bottom dots. Those bottom dots will continue to rise and fluctuate a little bit with the price pattern based on how it's calculated. But ideally, if we're going to remain longer term bullish, then we probably want to hold on to the bottom dots for a nice string together. And it's very rare that you have less than 3 or 4 at a time anyway. But it would take a move all the way down through 4220 at this point to flip those back to top dots. And I think to get down there, we would certainly need that ABC to one more low. So you would probably still get another 2 at least of those bottom dots before it broke. Then maybe you get a couple more on the top side, which would start up here if this is where we're making the top, and that would start to come down as we moved up off of a new low. The clouds also just kind of can function as general support and resistance indicators. We came crashing through this cloud and continued to accelerate. Now we have a corrective bounce back up to that cloud as possible resistance in the short term. So we'll want to see that corrective consolidation. And as we get that corrective consolidation, the weather pattern for this cloud is probably going to change as well. All right. From the time of the COVID correction, is there an opportunity between 1, 2, and 3, 4 from Elliott Wave standpoint? Do they normally proportional? I'm not sure, Matthew, exactly what you're asking there. Oops. Nope, I don't have that. I don't have it drawn out on my ES chart updated, except on this tab. So I think you're asking in terms of the Fibonacci extension of the third wave relative to the size of wave 1. And within that, again, like we looked at on the S&P 500, The ES is the same. You know, we're still in the region where we would assume that this is the smaller minor degree 3-4 inside that larger 3 of the post-COVID move. All right. Scott says the shorter time frame primary patterns being tracked seem to change morph into all patterns regularly. Do the longer time frame Fibonacci pinball primary patterns tend to have higher probabilities? I think basically, you know, Elliott Wave works by degree, and you know, I did, you know, this sentiment overlay, for example, oops, on my daily chart, and I never zoom in on this and don't change very much here because please don't mess it. There we go. Because, you know, it's a pain to move this and I didn't want to move it very much. And, you know, the larger degrees, you know, we can have a lot more confidence in, and they don't have to, you know, you have a lot more Fibonacci structure and Elliott Wave structure at larger degrees to give you confluence. And so, you know, we know with a lot more certainty what the shape of this move up should look like. You know, 1, 2, 3, 4, 5 inside that 5th wave, and this 3rd should have 1, 2, 3, 4, 5 waves, and then even inside this 5th, we should have 1, 2, 3, 4, 5 waves up inside the 5th. And it's only when we zoom in to the smaller degree we can say, all right, you know, we know that the 5th wave of that parentheses wave 3 should be 1, 2, 3, 4, 5, but we know that also that this wave 1 should be 1, 2, 3, 4, 5. And the first move up started is a clearly corrective looking move. And this still looks like 5 waves up as a C wave. So this doesn't even look like 1, 2, 3 of a smaller leading diagonal, or even, you know, you can't really count this as an impulse either, because it clearly started with a corrective looking move up. So that's where you get, you know, the smaller and smaller you go in degree, the more variable the pattern. And what you're looking at when we're talking about the market in the threads in it throughout the day, most of the time we're talking about, you know, 15-minute, 5-minute, even 1-minute charts and looking at that microstructure. And sometimes the microstructure fits perfectly as an impulse inside the larger pattern, but other times, particularly when you're dealing with more corrective looking structure that could be part of a leading diagonal, or maybe even still part of, you know, that alt wave 4, then, you know, your corrective patterns are going to be more variable than impulsive structure, and corrections within those corrections are going to be even more so. And then the smaller degree, you know, just the more volatility and variability you have. Thomas says, Zach, if we get a bounce in the NQ overnight, would that be a reasonable short, or do you think it would be better to wait? If you're trading futures, you know, a move up, where's that? It's kind of a joke that my micro count that I look at on the Nasdaq is labeled big macro clean. You know, some of my chart tabs, you know, sentiment stages and PSAR and iCloud, they say what they actually are. Some of them actually are micro or nano counts, and some are really primary tab, but sometimes I just move the primary count over to a bigger tab that says macro something, and delete a lot of the smaller time frames. I think we should probably get one more drop down to maybe 14,770s. And then if we get a clear corrective bounce again, you know, then that's certainly an opportunity in the Nasdaq. You know, if you're looking to short this and you're playing with futures at night, or maybe the micro futures at night, you know, then you can look for another Pirate Ninja to the downside. And that's exactly how I was looking for this entire move down to start. You know, I had a pretty high probability that this was topping in a B wave. We had an initial move down that didn't look like 5 waves, but a clear corrective bounce. And that corrective bounce set up at least a Pirate Ninja, you know, looking lower. And we got a nice drop and another bounce and could continue to look lower there. And that turned into what I was counting as wave one to the downside, got another ABC bounce, then could look for an even bigger pirate ninja to the downside. And that unfolded pretty nicely at the time as an impulse, even if it ends up now counting better as the ABC for a Y wave, as we discussed. Thomas, the PSAR dots, I work on every time frame. I primarily look at them on the larger time frames, daily, 4 hour, and maybe the 1 hour, 2 hour. But sometimes I'll peek at the 15-minute just to see how that's looking in terms of a near-term potential momentum shift. Also, can you talk about how the impulse off the 2020 lows would invalidate, and where would you stop out? Let's go back to the SPX to talk about that, because I think that probably is what most people are concerned with. I think that at this point, even if this were the larger three already, which some things, a lot of the stock charts that Garrett and I look at, this looks more like an ABC up for wave one and an ABC up for the third in a diagonal. And some of those do allow for more of a wave four consolidation. That would probably, that could potentially drop if this is, say, an A and a B wave in that deeper four. That could drop down towards like the 3750 region, and that would not invalidate the rest of the bull count. It would just mean that from there we'd be looking for only an A, B, C move up into the 5,000s and probably not the 6,000s. Again, we have met all of the Fibonacci objectives at the primary degree for a fifth wave up off of the COVID low. So this we've already exceeded 123.6% of the primary wave one, but the issue in more, we went from a 1764, we had a 200% extension here of the extensions of the third. 2382 would be a normal fib to top at, just fib wise, but subwaves inside this move, we don't have a completed count. Certainly if we started to drop stronger and started to accelerate through the 4200 or 4180 region, I would start to get concerned about a drop down towards 3750. A move like that would stop me out of a lot of my individual stock positions. Most of those, acquired in this region here. So hopefully some of those will be at break even or better. And I'd probably start to put on some hedges. I mean, I already have plenty of hedges in place now, just in case we do get that one more low. And if we accelerated through that, then some of those would be even more profitable. But I don't see that as a high probability from here. Again, if we got another move up as 5 waves up towards the 4930s, then maybe that's an extension of this 3 again. So you're looking for another ABC retrace, possibly back towards the 4200, 4300, or 4200 region again, as an alt of this 3-4. But it would probably take a strong break, either a more direct break now under 3900, and then further under 3700, to really have me concerned and looking at ways of recounting the primary wave 5 to be complete at this top, which I just really don't see it that way. And I don't see a lot of sector ETFs or individual stocks that are significant names that would agree with that. All right, let's also take a look at the Russell while we answer some more questions, and then and maybe also take a quick look at the Dow. All right, I'll pull up the Russell chart here. My concern on the Russell, we did get the orange ABC move down as a Y wave in this larger 4th wave that I was looking for. My concern is that now that we actually got it, it does look disproportionately large to still reliably call it the minor degree wave 4 inside of the parentheses 3. So I added this yellow 4 here. It's the same Elliott wave structure down that should be completing in this support region. Maybe, still certainly allows for one more low. If I were going to say, more so than even the Nasdaq, especially more so than the Nasdaq and the S&P. But would still be looking for a move higher. It just might be an ABC move up to another high, and that could top out all of the Russell. Matt says, can you show where and when the recovery of the last few days has made the lower low less likely? I think, well, I know before we look at the Dow, one of the things we'd like to look at is our equal weight charts. And we've looked at QQEW, and this is one of those charts that really gave us a lot of conviction that this move up into the end of December or the beginning of January in the S&P was a B wave, even though it was making higher highs in the S&P. And in the QQEW chart and even in the Nasdaq, it clearly looked like a corrective ABC flat that was holding a lower high. So we're looking to the downside. Interestingly, the QQEW did get a lower low on January 28th from the Monday low that held in the markets. So you could much more easily on QQEW put your 4 and 5 like this, and it more easily count at least all of the A wave, if not even all of this fourth wave. Again, we got below the 236. We got close to the starting point of this ending diagonal. And while I was worried here that I was looking for more of an A, B, and a C wave down into the 97 region, we did get close enough that we can easily call this all of the ABC for wave 4. It certainly needs to prove itself. But in this chart, we aren't even quite as high, relatively speaking. And so this could still be an expanded flat for the fourth wave, and it could try for one more low there. The S&P, it's just we're already past the 618 retrace of the third to the downside, and we're overlapping with the top of wave 1, which is okay in a diagonal, except these moves down didn't count as ABC moves to the downside. So it looks much more like we have a sharp zigzag as an ABC complete in those. And then the fact that we can count a lower low complete here on the equal weight version gives us a little bit more bullish potential off of that low to hold a retrace to a higher low and then continue to be bullish from there. I'm certainly still going to be looking for this to potentially be an A, B, and a C wave up for this B wave. But again, I'm more than willing to be open to this being maybe an ABC up for a green wave 1 and then holding a corrective retrace from there, or getting a similar leading diagonal to fill out like the S&P. All right. Is it possible to use, I don't know which methodology you're talking about. Maybe you're talking about the Pirate Ninja or the PSARs. You certainly can. I use it in conjunction with Elliott Wave, though not as its own as a bullish or bearish indicator by itself. It just helps confirm a possible shift in momentum. All right, let's take a quick look at the Dow. Because I think the Dow probably illustrates that the case even more so, where this is so disproportionate to the wave 2, and so much higher than we ever usually get for a fourth wave inside a C, that it is far more probable that we either count this as a WX and a Y wave complete, or we just squeeze in a smaller 4-5 into that January 24th low. It still is only 3 waves up off of the low so far, and the first move was not clearly a 5-wave up move. So we can be working on a similar diagonal. And also, as I've spoken about before, the Dow is at a different point in the markets as well, where this is a smaller, slight 1 degree smaller. So in the Dow, we could be working on maybe an ending diagonal for this 5th wave of the minor 3. So it's not setting up as a larger wave 1 heading significantly higher, but maybe it gets a little bit of a diverging move where we get the same diagonal structure, but it counts as an ending diagonal on the Dow. And then when the S&P holds as a corrective retrace as an ABC for wave 2, we still may not get lower than the January low, but we might get a disproportionately large ABC in the Dow, deeper than the wave 2, and counting that as a larger minor degree 4 then, and then they would be able to be on the same page heading up in the 5th of the parentheses 3 from that point. Doesn't have to get higher in that wave 1 though. I was just putting that there. All right, let's, I don't think there are any more questions on that at the moment. So let's shift gears just a little bit and move on to the to gold and silver and the miners. Okay, so gold is so far still trying to hold in a larger diagonal pattern for this primary wave 5 off of the March 2021 low. It got a very deep retrace, but held that low for wave 2. Clearly corrective move up, which counts best as the A wave of 3. Even though it's a little bit shy of the target that we wanted to see initially for that blue A wave, but I faded that out. And only have 3 waves up off of that low as the start of the C wave. So if it is the start of that purple C wave, it needs to be as a diagonal. The risk there, though, is that we have a sharper move down here, which could count as 5 waves down, and a clear corrective bounce, and a sharp move down here again. So if this low breaks, this 1781, then it is very likely that we're at least getting more of this measured move down towards the 1720s, and could even end up breaking the 1673 low. As you know, if we can hold the 1720s from a break of 1780, then that can just be an alt of this A and a wider flat for the B wave, and still turn up for the C of 3. If this is going to hold on to the 1780 low, though, I would like to see an ABC move up for the 3rd, a deeper 4th, and then an ABC move up as the 5th wave of the C of 3 towards the 2000s. Oh, yeah, sorry. What is the product? So RTY is my futures for the IWM. So I don't look at IWM quite as often. This is the Russell futures. Similar to the QQEW, though, it did get a lower low on the 28th. So this could have been all of a 4th and all of a 5th wave. But also, like the QQEW chart, this is easily an expanded flat for this 4th wave, and it can still try for one more low towards the 1890s or 1880s. That one more low is certainly not needed, and again, we can easily count this move complete, particularly more so than in the S&P and the Nasdaq itself, because we actually did get a lower low. But even if we count this as a lower low, this isn't a clear impulsive 5 waves up. It can count as 5 waves up, but I would count it as 5 waves up of a C wave, or maybe an ABC off the low. But if we can hold a higher low in the 1940s or 1950 region, then we can that would make a nice inverse head and shoulders, and we can count this as the low and be pretty bullish from there. It might be that larger degree, and we might be getting the ABC move up for the parentheses wave 5, but still very bullish. All right, so similar to what we were just looking at on gold, our chart on silver can be the similar ABC move up here. We have a bigger move down that got near a 100% retrace. That's even why it has the slight break in the futures overnight on lower volume is allowable. So this was pre-market here, this low, so we can be a little bit forgiving there as the wave 2 or the B wave, but clearly only 3 waves up and another sharp move down. So any break of the 22 region, and we at least have to look for more of a measured move from this down towards maybe 1920 region. But as long as this 22 low can hold, I think my preference is probably more in line with the purple count, similar to what we're looking at gold, just because it seems likely that those should stay more on the same page. And that would be looking for an ABC move up for the 3rd towards the 26 region, a deeper 4th, and then an ABC up towards the low 27s. On GDX, very similar actually, that we have corrective, we have a deeper move down that did not actually invalidate as a bullish start off of October, but came very close at the December low, only got a corrective looking move up, which could still be part of a leading diagonal for a larger wave 1. But if we break the low that we made yesterday, then we're probably heading down to test at least the 27 region as yet another low in this B wave. And that would have to count, where's my larger? Nope. Oh, that one. That would have to count as a WXYXZ, a triple 3 combination. That's where you have an ABC move down for one move, an ABC up, another ABC move down, corrective move up, and then another ABC move down. Kind of basically a descending triangle. It's just called a triple combination. Not the most common combination. It's not something that you can reliably look for to happen. So when we had what looked like a WXY completing and a more bullish looking move, we should continue to give that the benefit of the doubt until it invalidates. But it is very, very close to invalidation, particularly if it is going to break the low that it made on the 28th. Maz Stork says, if the first wave of an LD is itself an LD, so an LD, a diagonal, is always going to be a structure where all of the subwaves are 3-wave moves. So it's a 5-wave structure, and all of the subwaves should be ABC corrections. That did not quite work how I wanted it to work. Oh, that's bad. Let's just delete that whole thing. Where all of the subwaves are ABC corrections. So you can have wave 1 be a leading diagonal, and you can have wave 5 be a leading diagonal. But that's in a bigger impulse. In a diagonal, all of the subwaves, even wave 1 and 5, should be ABC moves. This does look like 5 waves up off of the low, the 2890 low in GDX. So if it can hold, 2975, then you can get a little pirate ninja, would maybe target the 32 region. And you can slowly try and build that into more, but our smaller leading diagonal for the wave one is significantly less reliable with that break, with the break of this low, which came very, very close to breaking the 28.75 low from early October. All right, let's take a look at TLT. In lieu of looking at all of the other bonds, usually I like to look at the 30-year more, but so far I think TLT might be kind of pushing the other bonds and is holding some more clear structure off of the March 2021 low. Really looks like 5 waves up and a corrective retrace to just a bit under the 618 Fibonacci retrace level. A strong reversal, held a higher low and a second higher low so far. So I do think we're trying to work on wave one of a larger third to the upside. It is not yet confirmed, but as long as we can hold this string of higher lows, I think we're off to a really good start. So I would really like to see 141 hold now in TLT and have us continue to work on an ABC move up for the third towards 148. A retrace is 4, and then an ABC move up towards 150 to 151 as the fifth wave of that wave 1. Let's go ahead and take a look at oil. I was very concerned that oil had possibly topped in all of this fifth wave here. Obviously, we can take that off now because we made a higher high from that. We're the most bullish that we could get off of this low here was that we were looking at a 1-2 of a larger ending diagonal for that parentheses wave 5. We started with a clear ABC move up. And then we got a deep, nice ABC retrace, so we could be very, very bullish from this higher low. We got what looked like a 5-wave move up to here, and then this just looks like more extension. It looks like more extension of the 5-wave move up of this C wave, but I don't think it's a B wave anymore. So, and I didn't once we failed to drop hard from here and started pushing to higher highs, that became much less probable. But what I do think is that this is still possibly just the A wave in this third of a diagonal. So we are past the 100% extension. So we do have to start to consider, particularly if we extend a little bit more directly towards 93, that this is just all of the third of the diagonal. But the ideal for me would be a consolidation, a quick, clean consolidation back down towards the 80 region as a B wave inside this third. And then that could set up for even more extension into the rest of this year. This fits a lot of the pattern that Garrett and I have been tracking off of this August low in a lot of the individual energy names. And a lot of those do allow for more of an equivalent B wave consolidation before they head higher in the third of the diagonal, and then should get a 4 and 5 as well. And then we can also take a look at natural gas. Natural gas could get a little bit higher here, but so far we've really filled out nicely as 1, 2, 3, 4, 5 waves up in a proportionate C wave, also proportionate to what we were looking for as our A wave in the ABC up for this parentheses wave 5. So could get some more extension, could even get a blow off top to the fifth of the C wave towards the 6 region or above, but probably due for some consolidation back into the mid 4s, maybe mid to high 4s. 4,675 to 460 would probably look ideal, but have to look out, that could still come deeper still. This is a pretty deep retrace for the B wave here. What it seems like a lot of these commodities, like to do, particularly when they're in diagonals, is get those deep B wave retraces, but then make up for it with more extension in the C wave. So instead of holding 460 and then getting a 100% or a 1,236% extension for this C wave into the 8 or 9 region as our ideal target, you could get the deeper B wave down to the 425 region maybe, and then you get a 1,382 or a 1,618 extension of that C wave to get to that same target. So that is kind of what I would be looking for. 476 to 425 is pretty much your ideal fib zone. You guys like how I eyeballed that and it happened to be pretty spot on. Just comes with time. All right, and then let's take a look at the dollar, and then we're pretty much getting out of time. I do think that there's a chance that the dollar hit a more significant top, and count this as 5 waves down for an A wave. And so far, a corrective bounce that looks like it just got a little extension. So I am looking for a potential measured move or pirate ninja down towards the lower 80s on the dollar, which could be very, very bullish for other things that are priced in dollars. Not that we look for any direct correlation, but that is kind of a nice reversal so far from the extension. So we'll see if that can gain any kind of traction at all. Don't know what else we're missing from our normal coverage. I think that's pretty much everything. Oh, we look at EEM usually in the market section. EEM got my orange 4-5s to give us 5 waves down. We didn't get 100% extension of our orange pirate ninja, but we did get pretty close. This is probably a 764. And again, it is possible that this is a bigger B wave bounce, and it does try for one more low closer to the 45-40 region as ABC down for the 5th of C of the parentheses B. But the skew on EEM is certainly in favor of the upside. So while it's possible to get one more low, it is absolutely not needed. And the 45 region is looking like great support. That is a 38.2% retrace of the parentheses A wave up in this primary wave 3 of a much, much larger diagonal. So this is the March 2020 low counts as a primary wave 2 instead of a primary wave 4 for EEM. And we're looking at this big A, B, and a C wave up. So similar to the small caps that this topped back in February and has been in consolidation ever since. The small caps topped in like March, have been in that more complex 4th wave since then. It's finally near an end and setting up for some really, really nice upside. Our wave 1 should probably target, let's see, this is our measured move for the C wave from that 46, 47 region. Really targets about 90, but the 84 region is a 1618 extension, which is already pretty strong for the 3rd, even though it's a diagonal, especially because it's diagonal. But heading up towards at least the 56 to 5960 region for wave 1 would really be great. And then we can get more of a wave 2, and then wave 3 up probably close to the 72 to 75 region, and then a 4-5 on up towards 84. So that's what I'm looking for in EEM. And I think we'll probably hold it there, and I will get this converted and uploaded for you guys later this evening. All right, have a good night. And if you have any other questions, you guys know where to ask them. Take care.